Hey everybody, Mark Yegi here. I'm a wealth architect who helps 7 and 8 figure investors play offense and defense in their investing by creating safe, reliable income. And in this video, we're going to be talking about a stock that's got some tailwinds and some probabilities behind it that's going to help it go higher in the used car market. So stay tuned. CarMax is in the used car business primarily. They're a retailer, and they are just cranking right now because the used car market is so scarce. So the used cars are scarce. They're going up. The value is going up, and that's because there's a chip shortage worldwide that's causing car makers to pull back on their production. There's also a labor shortage because the government keeps paying people to stay home, and there's also an inflationary pressure from the Fed printing extra money. And so all these things are coming together to make used car prices stay high, at least not decline. And certainly in some cases are going up. In a lot of part of the country, they're going up. And so who's going to benefit from that? Well, it's going to be the companies that are going to be selling used cars. So there's not a lot of consolidated used car companies, but there are a few. The main one, the big gorilla is CarMax. So let's take a look at the chart. The fundamentals are great. The tailwind is great. The probabilities are great. And I'll tell you from a technical perspective, things are looking like a breakout. So if you ever follow my chart reading, I'm going to start here on a weekly chart, and you're going to see me go from the right to the left. But I want to just show you the recent, let's call it 8 or 9 weeks, or probably, or even longer. But basically starting at this spot on the chart right here, where you see a high of roughly 136.34. And so you can see it kind of made just a little area in this area where it consolidated, and then it broke through that consolidation. And you can see the volume on that is fairly high if you look at the volume on the bottom. And so when it broke that, there was a lot of selling. You could see about 5 weeks of selling right in here, right in this area. And then it kind of figured out there's a spot there that it didn't want to go any lower, and it started to build a bottom. So it's making a nice little cup pattern here, and it's building a bottom. Now, when it started to come up, look at the volume on the way up. Now, the volume is institutions buying, right? It's not your Aunt Sally buying, right? It's institutions. And so institutions are buying on high volume and driving it back up to that 136 level again. And it hit that 136 level, and it bounced off it 3 weeks ago. You see that there? It hit 137.53, but it did it on low volume. And when it does it on low volume, there's usually a bounce back down. But now it's coming back up and trying to hit it again. So it seems like on low volume again. But to me, this wants to stay up at this level. This is a hammer candle up near the top. And if we can get some volume in here in the next couple of days, then we're talking about a significant breakout possibility. And if this thing breaks out at this 136 level, I see it going to about 162 using the ABCD pattern that we talk about. And so I see a 162 as the preliminary target price, but I also see a pretty big jump on this if this tailwind continues of low chips, low labor, and high inflation. You'll see how much noisier it gets here on the daily. So there you see our cup and the little handle pattern right there. And this is the top of the handle pattern at 137.53. And so you could see it tested that today, but it didn't quite hold it, right? Because it basically needs about 1.3 million shares, and it only did 850,000 shares today. And so if it doesn't have at least 1.3 and break through that spot, it's going to back down from there, but it may take another run at it tomorrow. So what we need is this volume to start increasing as it goes through that level, but it's trying. And certainly the more it tries and fails, the more people are going to start to possibly get behind it. So you've seen a very orderly cup pattern with a nice orderly sell-off in the handle, and then now it's trying to break through those highs. So I see CarMax going higher. I see the fundamentals behind it. I see the sector improving. I see the relative strength of this company improving. I think this company is poised for a nice run through the end of the year, say a 20% increase if we get a breakout up to that 162 level. And then if we can continue that breakout, if we get it some strength and we start to build that that longer term trend, then I think we're looking at a stock that in 2 or 3 years could be over $200, probably more like the $260, $270 level. In my mentorship program, I show you exactly how I find the right stock in the right market at the right spot on the chart. You don't need just to learn strategies in my hedge fund. I show you hands-on how to execute them week by week, ensuring that you're able to make reliable income using the stock market without any guesswork. Click on the link in the description below to learn more, and click the subscribe button for more videos on growing wealth for your investments.